Welcome to the Swing Trading with Cycles channel. We're going to do our update on gold, silver, and other precious metals today. It's March 14th, 2023. It's the Tuesday evening, I should say. We had the CPI number this morning. I believe the PPI number, so the producer price index, comes out tomorrow. Let's look at some charts, see where we stand. If you're new to the channel, welcome. Definitely take a look at the pinned comment. That will give you a lot. Whether you're new to the channel or not, the pinned comment will direct you to the latest videos, previous gold videos, but also other asset classes. So in my previous video, we were marching up, I think, right here. And then we had a really rough back test for all intents and purposes, right? Like notice, again, this is your daily chart for gold. This is gold, spot gold, not futures. You can see this low here held above this low here. So you had this incredibly long daily cycle. And again, remember, the stakes are really high because this is your potential 8-year cycle low right here. And so far, what do we have? We have a higher low, this holding right here. Now, that doesn't mean that this can't fail. And obviously, at this point, that is your ultimate line in the sand. Once this fails, it increases the odds that you're going to start to sort of probe these levels here. And again, this is your potential 8-year cycle low that you want to hold on to. But just really specifically here, we're on day 11 of the daily cycle, just open today. So this candle right here, this tiny little thing here, is what's going to become your Wednesday candle. So we have our high on Monday, right? That big move up on Monday. We made a high at 1914.60. Again, this is spot gold. And then the next day, so today, Tuesday, we made a high at 1914.16. So about 44 cents lower. So this is an epic, ugly double top on a smaller time frame, which we'll look at. And most importantly, today's candle has opened as an inside candle. So, and this candle is also an inside candle because it didn't make a higher high, but it's also at the higher end of the range. So creates a really simple situation here. If you have this as an inside candle and then this is also an inside candle, you just simply need to hold above this low here. So this low here is 1895.55. So not surprising, call it the 1900 zone. Now, as I always say, just remember, anytime we make a lower low or a higher high, there's the possibility that price doesn't follow through and we get a false breakdown or a false breakout. So that's something to watch for as well, right? Like a candle that dips below that level, like that, call it 1895 area, and then whoop, rockets back up. So really easy stakes here. And obviously to the upside, it's that 1914 level that this thing needs to get through. So the levels are like incredibly clear here, and the implications are important. This could be an early daily cycle high on day 9, and the implication is that we would, we did something like this, held a little higher low, and then did this. So we're doing something like this, that's your bearish case. And obviously your bull case is that this low holds here and you just continue to move up. So, maybe again, you even get that false breakdown and then you continue to move up, and it's not a left translated daily cycle and we have a high on a later date. Those are your implications. Really simple. Got to stay above 1895 at this point. That's your daily chart. If we look at the weekly, it gets even more interesting. Again, notice, just so we're clear, this is your potential 8-year cycle low here. And look at this weekly chart. Series of higher highs and higher lows. This is a big one, folks. Like, look at this. Think about that. This is your proverbial higher low. If this holds, man, that is really strong evidence that this was your 8-year cycle low. And obviously, if it doesn't, that tells you the opposite. And it depends on how. Like, obviously, the other, again, keep in mind, you could have a false breakdown of this level, which is around 1800. What is this low? That low is 1804.78. That would obviously be painful, but that's a scenario where the daily cycle does top out early. Like you can see from this chart. So our weekly cycle high was week 18, and that was week 19, 20, 21, made a lower low on week 22. So this is potentially week 2 of a new weekly cycle. We had marked at the time that that was an inside candle, like we needed to get outside of this range, and we have done that so far. Now it's going to be, and that level is, what is that? 1870. So that's a level to watch to the downside in terms of, does price react to that level? Do we get some kind of bounce there? And so again, implications pretty clear. If this is a left translated daily cycle, then the weekly chart is going to do something like this. Or I mean, that is actually a little bit even optimistic, because the implication is that we've already topped out. So it's actually something like this right now, and we don't know how far down. I mean, obviously that's like the bear case, but it could be something like this, right? A little undercut here and then off to the races. You got to stay nimble, got to pay attention to the details. Don't get too caught up in a narrative like, oh, we're going off to the moon, or that no, this thing is going into the ground below 1400, below 1500, whatever it is. Just watch for the data. So we're potentially in week 2 of a daily cycle, of a new weekly cycle, or we're going to roll over and complete the weekly cycle decline. Because if this wasn't our low on week 22, that also, just to be clear, that would make this week 24. So also keep that in mind. We're not very so think about that. If this isn't your weekly cycle low, then we're still really late in the weekly cycle. So it's not clear that you're going to get many, many more weeks of downside. You just have to be just again, be careful. Watch the trend, and try to resist the urge to try to predict too much. And this is your monthly chart here. Very interesting look to this thing. Again, I think it's helpful just to kind of take a step back and just kind of visually look at this thing. This was a bearish outside monthly candle, and it got no follow through, like none, right? It made a lower low below so this was your February candle, made a lower low below the January candle, but then just couldn't follow through. And now we're trying to come back up. So all that to say, this is all the hallmarks of essentially a consolidation pattern of this move up, right? Like you think about this move up is being digested, right? Like that's your little higher low. And then there's another way of thinking about that, because that's what you're going to get, right? You're going to get higher lows on the month, on the daily, on the weekly, and eventually on the monthly charts as well. So that's the picture for gold. If we go to silver, so silver, we'll start with the monthly chart. So obviously gold is outperforming. Like the chart is more bullish for gold, just that it's made more progress. For silver, again, this is your monthly chart. This is setting up for a false breakdown, right? Again, same kind of idea. Made a lower low below this candle's low, and now it's trying to just kind of make its way back up the range. If we look at the daily candles, if we look at the daily chart, I should say, so this is where it gets a little bit interesting, right? You could say that, and that's why this is where I don't get too hung up on the cycle count. Like, oh my God, is it the daily? So in real time, this, just like gold, this appeared to be a daily cycle low, and then it failed. And so you could say that this was your daily cycle low that has already failed, or this is your daily cycle low. Either way, we've chewed up some time here in terms of the advancing phase of the daily cycle. But more importantly, just like gold, we're consolidating at the upper end of the range. For silver, that make or break level, again, it's the picture is very simple here for these two metals. That low is 2150. And that makes you vulnerable basically down to breaking this new low here. And obviously things get much uglier from there. Looking at the weekly, this is where things get a little more complex. Last week's candle is potentially your weekly cycle low, and that comes on week 26, which is actually pretty in line with previous weekly cycle lows for silver. Yet you see a lot of them were like week 27, week 28 even. So that would, if this wasn't your low, then this would be week 27, and maybe we set up for another lower low next week or the few weeks after that. It's also the case that, this cycle was 31 weeks. It's not like they have to be exactly 26, 27, whatever it is. But it's similar to gold in the sense that we've already drooped for quite a while. We've already declined for quite a while. And so it'll be interesting to see if we do continue to see, many, many more weeks of downside. And the swing low level for this thing is above 2130. So we'll want to watch to stay above the swing low for the weekly chart, that is to say, to give ourselves the possibility that week 26 was the weekly cycle low. So that's silver. And now we'll turn over to GDX, the miners, and then we'll close out looking at some ratios. And wow, to gap up yesterday, some follow through today, but not by a ton. But definitely, if you're holding shorts, hard to hold on to your shorts. And the same pattern as gold. Gold didn't make a lower low though. This thing did, I think. Did it? 2659, and that's 2664. So this thing did make a lower low. So again, I think in hindsight, it'll be more clear where we are in the daily cycle. But what we know is that just like silver, you could call this whole thing part of this up move. Now we have obviously had a nice 2 days, but you have to be aware of your downside risk. You have this gap here from 28.35 to 20, so call it 40, 35, 40 cent gap. This is going to be really interesting to see how this plays out. Let's see the weekly chart. Does that tell us anything more obvious? Again, we're not late. We're not super early in the weekly cycle decline. It's been on for a little bit while, so that's important. So we topped out on week 17. This was week 18, 19, 20, week 21. So far we have our low on week 21. Wait, is that a lower low? 2664, 2659. Well, technically we just made a lower low this week. So that would give us our ICL on week 23, theoretically. Interesting. Now, we've certainly gone for much, like cycles that were like closer to 30 weeks for GDX. So you could argue this isn't super late, that we still have a ways to go. But so far, big, beautiful swing low, on the weekly chart, excuse me. 2 trading days have already are in the books. So we have 3 more trading days to go. Does it close above this level? That's the key we want to see by Friday. Can it hold this? But that's looking really interesting. Now we'll close out looking at a few ratios. We'll look at GDX to GLD to give ourselves a sense of miners, how they're performing versus gold. And as we've said, we want to see this reverse to know that the metals have made a weekly cycle low, and it has the possibility here. So a potential low on week 18, 19, 20. On week 23, just like GDX itself. So we'll see. So it's mirroring the action of the miners as a whole. We didn't look at the monthly chart for GDX, actually. We'll go back. But look at this. That's some bullish looking action right there. What does the GDX chart for the monthly look like? Yeah, some bullish action. Again, a slight lower low. Kind of similar to gold in that. Like this is for now sort of playing out like a consolidation pattern. Let's see if it can hold that. And finally, we look at the gold to silver ratio, which generally is moving lower as metals do well. And so I pointed out on Twitter, big up move on the monthly chart. I mean, look at these 2 big green months. And then this is your March candle, which was following through. At one point, this was a big, beautiful green candle. Look what it is now. It's not so big and beautiful anymore. It's a big shooter. It's still green, but it opened at 87.46. So below 87.46, which is like 40 cents from here, this thing goes red, and it starts to create the possibility that we're going to do something like that, right? That this whole move was a lower high that is about to roll over into a lower low. Huge implications here, because again, that would be really bullish for the metals. That would tell you something like, wait, right, we're actually not that late in the weekly cycle. Is it possible we've printed the ICL? Is it possible we have that long-term cycle low in place? So I don't want to be on the wrong side of the long-term trade. Look at this big upper wick. Now, there's still a lot of months to trade, to be fair, so this thing could turn around. So let's look at the lower time frames, see what's in store for us. Furious rally on the weekly chart, and so we're getting a pullback. That's not surprising. How many weeks was that? Let's just confirm this here. Yeah, so that's an 11-week rally, but I mean, look at that. Almost every week makes a higher high, and they're all green. And now we have a red week so far. Still 3 days to go to trade, so a lot could change. But it's still an inside week. It actually hasn't made a lower low yet, so that's a big one. It would need to break below 87.25 to make a lower low. So we're going to be watching for that. I'm actually going to go ahead and set an alert here. Okay, so that's gold to silver weekly chart, and finally, let's look at the daily. So the implication is that a weekly cycle high is that on week 11. This daily cycle has just been running, and the implication is that this is a daily cycle high after a crazy rally. I mean, you could argue a daily cycle has happened already in here at some point, but like, I mean, look at this uptrend. This is your weekly cycle in daily form for all intents and purposes. So I call that's a 57-week rally. Now, or excuse me, a 57-day rally, 57 trading days. Wowza, that's a long rally. Now, you've had these periods where it looked like it was going to roll over, still went on to make a higher high, like looked like it was going to lead to something more significant. So this could end up being nothing. But once we printed that swing low below this low here, so that's 89.97. That's what set things off. So that's the number that you want to look to the upside for. And you can see the last 2 days have just been consolidation at the lower end of the range, i.e. a bear flag. And this is all happening below the 10-day moving average. That's what this blue line is. So really important charts to be watching here. And we will continue to watch that and provide updates on Twitter. If you're not following on Twitter, definitely take a look at that pinned comment and do some videos as it makes sense. But again, big implications, potential to confirm the 8-year cycle low here. Or if we don't, the reverse is also true. There's money to be made on the downside. So we'll continue to watch for that. Thanks for watching this video.